Welcome to the Childcare Director's Chair, the podcast for bold educators who are ready to lead, grow, and shake things up in early childhood education. Whether you're a teacher eyeing that lead role, a lead stepping into leadership, or a center owner dreaming big, this is your space to grow with purpose and leave your mark. Hosted by heart-centered leadership coach Erica Sacosio, each episode brings you real talk, actionable tools, and a contagious laugh or two, all designed to help you step into your next level with confidence. So pour your coffee, pop in those earbuds, and take your seat, because your leadership journey starts right now in the Childcare Director's Chair.
Hey guys, it's Erica here with the Childcare Director's Chair podcast, and I have a question for you. Your childcare business was never meant to just break even. It's meant to grow, sustain, and thrive. So many childcare owners are working harder than ever, still feeling unsure about profit, overhead, taxes, rising costs, staffing challenges, and financial pressure can make it feel so hard to stay afloat and just, do the best that you can. But today we're going to change that narrative. We're going to have a powerful session with David from Daycare Accounting Pro, and he's going to break down how profitable childcare centers really think. I don't know why I can't talk today. Where hidden costs may be holding you back, and how smart tax strategies can put thousands of dollars back into your program. This isn't about doing more, but it's about thinking smarter. So welcome to the show, David.
Thank you for having me, Eric.
Yeah, very happy to. So tell folks a little bit about yourself before we dive into questions.
My name is David Encarnacion. I'm an enrolled agent, and I'm also a certified tax strategist for the childcare industry. I started doing taxes back in 2010, and my first client happened to be a childcare. And pretty much things built up from there, and it got to the point where I knew more about the childcare business than the owners themselves. And I started noticing certain trends. I realized that there was a lack of guidance with regards to taxes, bookkeeping, payroll. And I decided, you know what? Let's rebrand and just build our niche around the childcare industry. And I have to say, even to this day, I still have conversations in which I find that current accountants, it's not their fault. They're pretty much, we call them reactive. When they file tax returns, they're being reactive. They're reacting to something that already happened. When in fact, what the industry needs is to be proactive, where we determine how much tax we pay. So we're a firm believer that you should pay yourself first before paying taxes. And there's so many strategies available, but unfortunately, the childcare industry is not privy to them. Like I like to use the example of Amazon. Amazon makes billions with a B in profits, pay zero tax, and recover hundreds of millions in refunds. How? And that's the secret. So those are the type of strategies that are available to the childcare industry, but they're just not familiar or knowledgeable about.
Well, thank God for you, David, because we need people like you. So let's talk about it. So many childcare owners are busy every day, right? But still feel financially stuck. What mindset shift is required to move from that survival mode to real profitability?
I'm so glad you mentioned that, because that's one of the things that we focus on here. And every client that we have, that is the main point. We have to change your mind shift. We've had clients that have contacted us, and I'll give you an example. This lady was in Texas. She had about 6 centers, and she was so focused when she called me on, what can you do with regard to my taxes? And we went on, and she was kind of combative with me. I said, listen, we could solve that problem. It's not, well, how are you going to do it? I said, we could take care of that. However, I told her, your biggest problem is not taxes. Taxes we can take care of. It's not a problem. Your biggest problem is that you leaving $2.3 million on the table because of lack of enrollment. So rather than focusing on taxes, when you can have a professional handle that, you need to focus as an owner on the enrollment, because that $2.3 million, trust me, will solve a lot of problems and will pay the tax bill that you're worried about. So sometimes we as owners, including myself, I'm going to put myself as an owner, there was a point that I was the bottleneck, and I had to understand, because I reached a point where I hit my plateau. Why can't I continue to grow? And I realized through some coaching that I was the bottleneck, and I had to make certain adjustments on my team as well as myself so that we can continue to grow. So the moment you realize that and you act upon it, the sky is just open.
Yeah. So based on your experience, what is the most common financial mistake that childcare owners are making without even realizing it?
I've spoken to thousands of childcare owners, and I would say the primary mistake that I see, I would say about 65%, is that they've chosen the wrong entity structure. By that, I mean, you would be surprised at the amount of business owners that are making $1 million, $2 million and are filing an LLC as a sole proprietor. By doing that, you're shooting yourself in the foot because you paying at least $25,000 in taxes towards self-employment that you can avoid paying.
Yeah.
And it's a simple structure. It's a simple restructuring that we can do that can save you thousands.
Yeah.
But unfortunately, again, the lack of guidance. I understand that you're wear 15 different hats, you guys are busy, and you don't have time for taxes. Times, more often than not, the financials fall to the side. Then in December, on the 31st, actually the 30th, yesterday I had a call with someone, she wanted some tax strategies because she was going to pay $80,000 in taxes. You're late. You're late to the game. We have to do this throughout the year. And these are situations that we find. But that S-Corp status, that is so critical. Then you have childcare owners, again, lack of advice, where they are a sole proprietor and they're taking a W-2. So one, that's prohibited by the IRS. And two, you're double taxing yourself. You're doing it to yourself.
Yeah.
So the best way to do it is just to seek counsel.
Okay. Where do you typically see hidden costs in childcare centers that quietly drain profit?
The hidden costs are pretty much everywhere. So there's this madness, a system to the childcare industry. So for instance, when we run our books for our clients, we understand that administrative costs should be between 5 and 10%. Most childcare owners don't know that.
Way more than that.
And when we do them, the same with payroll. Payroll should be, if you're running an efficient center, it should be between 35 and 40%.
Yeah.
Some, it depends. If you're an absentee owner, I could see that number being a little higher. However, it shouldn't be more than 65%. And I see hundreds of childcare owners, sometimes even at 70%. I saw one that was at 90%. That's insane. So you have to be able, you have to know your numbers. Like I tell my clients, I don't need you to be an expert. I just need you to have a working knowledge. And during our review sessions, we go over that. I show them the percentages that they're spending on each item or each category so that they understand these numbers. And if those numbers are off, we're going to address it and see what adjustments we need to do so that next month or next quarter, we fall back in line.
Yeah.
But at the end of the day, as a business owner, you have to know your numbers. And now more than ever, because a lot of centers, unfortunately, will be closing, and you will be put in a position where you could purchase a center at a bargain cost. But if you know your numbers, you'll be able to pull the trigger. If you don't, someone else will.
Yeah. Yeah. That's really good advice. Many owners believe that low profit is just part of being part of the childcare industry. Why is that belief harmful?
It's a belief because that's what society, the financial system, the government tells us. I don't believe in that. I believe it's not how much money you make, it's how much you keep.
Yeah.
And if we believe in paying yourself first, hands down, that's what we're going to do.
Yeah.
For instance, I have a client that her taxable income was $825,000. So she was going to pay a lot of tax. So rather than paying, it was like, $340,000 in taxes. I told her, okay, we're not going to pay tax. What we're going to do is we're going to implement a strategy to wipe out that $825,000 in taxable income. We're going to take $100,000. We're going to put it into this strategy. So rather than paying $340,000, we're going to put $100,000 into this strategy. That strategy in 5 years will render us a 18% ROI. In 5 years, you'll have $200,000. So not only did we not pay the $340,000 in taxes,
you grew the money.
We paid ourselves and we're making money.
Yeah.
That's advanced tax planning.
Yeah, for sure. What key financial numbers should every childcare owner be reviewing monthly, but are often not?
Every month, you should review your revenue and your expenses, specifically payroll and your administrative costs. Because the other program costs and building costs, those are pretty much fixed, but administrative costs and your payroll, and obviously your net income. And based on that number, you're able to gauge, I can tell you how much tax I can estimate how much tax you're going to pay in 2026 next year on the first quarter's numbers. Because based on those numbers, we compare it to last year's, and if they're in line, we can make a good estimate of what the end of year will be, and we could start strategizing on the first quarter. not wait until December when it's too late.
Okay. All right. Let me ask you, taxes are one of the biggest stresses for providers. What tax strategies do childcare owners commonly miss that could save them thousands?
Okay. I think we have a piece of literature. It's an electronic piece of literature but has different tax strategies. I believe it has 7. But the primary ones, the first one is the Augusta rule. If you have a center and you have staff meetings at home, you can pay yourself $28,000 from the business. In other words, the business is going to be renting your home for staff meetings once a month. The business will pay you $28,000 a year. One, that's a business deduction that will be categorized as rent for the business. Secondly, that $28,000 not pay tax on your personal side. So that's basically tax-free money. Obviously, you have to have a documentation,
of course,
in case of audits to respond to that. The other one is hiring your kids. I have so many childcare owners that have children under 17 that the children are not being put on payroll. It was yesterday. I spoke to someone. So listen, do you have a website? I said, yeah. Okay. So are the kids, do you mind putting the picture of the kids on the website? Says they're already on it. Well, because they're on the website, they're considered the talent and therefore are entitled to a wage. And I made an example. I told her, listen, if you called Rihanna and asked her to put her 2 kids on your website, how much is she going to charge you? Exactly. So put your kids on, they're already on the website, pay them a reasonable amount, $15,000. First, that $15,000, since they're under 17, they do not pay tax, Social Security, Medicare. That $15,000, you could direct deposit into your personal account. So if you have 2 kids, that's $30,000 deduction for the business, $30,000 income to you tax-free. And third, you still get to claim them on your tax return. It's a win-win.
Yeah.
And that's just
I
2.
wish I knew that when my kid was 17.
I'll give you an example. My kids have been on payroll since they were 7. So I go way and beyond. So I opened a Roth IRA for them because you could open a retirement account with earned income and they're earning it. Roth IRA. So if I were to ask you a question, how many childcare owners had a retirement account at the age of 7?
None.
So we go on social media and we have all these influencers talking about wealth building.
Mm-hmm.
Well, here's one that you could easily do. So by the time that child is 30, they could easily have over $1 million in that account. And the best part about the Roth is that the increase or the value or the appreciation is tax-free. So if that account goes to $1 million and that child pulls that $1 million, they pay 0 taxes.
Wow. David, you are somebody that every childcare owner needs to know for sure. This has been such helpful advice, and I'm sure so many folks are thinking about this, right now as everybody's getting ready to bring all their papers to their accountant, in the next, week or month anyway. Yeah, I think this is really helpful. So as we wrap up, let me ask you a couple more questions. What separates centers that grow confidently from those that stay financially stuck year after year?
Delegation. Those that understand that they have to invest in themselves so that they can grow, so that center can grow. If you're stuck doing taxes, doing bookkeeping, doing payroll, you're shooting yourself in the foot. Example, I personally do not do my own bookkeeping. Believe it or not, there's no purpose in that. There's no value for me in that. That 2-3 hours that I can spend doing my books, I can spend educating and coaching a childcare owner to make more money. So it's meaningless. So we have to understand what are the priorities. So what I do is I take 3 priorities that I have to do today, and I make sure that I complete that. But what I can't complete and the minutia, things that I may be doing, I have to hand that off to an assistant, someone that can manage that. So that your focus as an owner is only on building the business. You have to ask yourself, how is it that I have owners that have 3 centers in different states and are able to manage it and are thriving because they understand that they have to delegate. You cannot be the bottleneck. The moment you realize that you're the bottleneck and you decide to open up and delegate certain tasks to other people, that's when you'll see the growth.
Yeah, it's good advice. All right. So if attendees could walk away with one financial strategy from your session, what would it be?
Okay, that's funny. So I know, especially in December, everyone that calls, they want the secret sauce. Yes. And there is a secret sauce. However, the secret sauce, I like to compare it to our DNA. It's individual to everyone. So strategies that may apply, say for instance, you, Erica, that may apply to your investment strategy, to your type of income, to your family structure, to your goals, may not apply to someone else.
Sure.
That's why everything that we build is custom to that specific individual. Because if the client tells me, I'm looking to sell in 5 years, all of a sudden, all the strategies have to change.
Sure.
Because now focusing on selling at a higher multiple in 5 years.
Yeah.
And we have to structure the business and the books so that when a suitor decides to come and purchase and we give them the books, they're in awe and they're able to pull the trigger and offer a higher multiple. So
And that's happening right now,
depends.
right? Centers are getting
Yep.
letters all the time. I think I get 5 letters a month on people that want to buy my centers. I mean, they're
and
out there. Yeah.
Yeah, and there's some, like I have a client that she's selling 2 centers right now, and she set up a call with the agency, and I didn't know who I was meeting. When I jumped on the Zoom, there was no room on the screen. There were 16 people, and each person had a different department in that company, and they were just firing questions at me about the books and records. But if our books and records weren't in order, we would fail that audit, and we wouldn't be able to sell. At least sell at a premium.
Yes. Yeah. All right. So why is this information so critical for childcare owners right now? Why do they need to know this?
I've been ringing the bell for a decade already.
Yeah.
And they need to get on the ball. If you do a Google search and you ask Google, what percentage of top earners making over $500,000 of income pay zero in taxes? The number is going to surprise you. It's less than 0.5%. So every childcare owner that's making that type of income, I tell them, you need to be part of the 1% club.
Yeah.
You have the ability, you have the resources, you just have to make a decision.
You're such a wealth of knowledge, really, David. Thank you so much for sharing, opening people's minds, letting them know there is some hope. They don't have to run themselves into the ground in their 4 walls, and that they can have something that's profitable or a legacy for their, the next generation. So if you're ready to stop guessing and stop surviving and start leading your childcare business with confidence, this session is for you. So join us on May 7th, 8th, and 9th. David is speaking on May 7th, which is our owner focus day at the Crown Plaza in Warwick at the Early Childhood Education Conference. And be ready to gain clarity, reclaim your profit, and build your childcare business that truly supports your vision. So get your tickets. The link is below. And as always, thanks for tuning into the Childcare Directors Share podcast. David, thank you so much for your wisdom, and I can't wait to reconnect with you in May.
All right, thanks.
Have
Look
a
forward
great
to seeing
day.
you. All right.
That's a wrap for this episode of the Childcare Director's Chair, where we believe leaders aren't born, they're grown. If something sparked for you today, share it, shout it out, or pass it along to the next bold changemaker in childcare. Don't forget to subscribe, leave a review, and stay connected with Erica Sacosio for more real talk leadership tools and a whole lot of inspiration. Until next time, lead with heart, grow with fire, and always remember, the chair is yours. Now own it.